Hi, John here with IWillBuyYourHouseForCash.com. Are you selling your home in New Jersey and planning to move out of state? If so, you've probably heard about the infamous exit tax. But what is it, who pays it, and how do you avoid getting hit with that surprise bill at closing? The so-called NJ exit tax isn't actually a tax. Okay? It's a mandatory withholding that happens when a seller is no longer a New Jersey resident at the time of closing. It ensures that the state gets its share of capital gains tax on the sale before you leave and possibly stop filing your NJ tax returns. Okay? Good question is, how much do they withhold? Well, at closing, the title company must withhold the greater of 2% of the total sales price, or roughly 9% of your estimated gain on sale. So let's say that the sales price was $400,000 and you bought it 5 years ago for $300,000. Therefore, your gain on sale is $100,000, okay? Title company will take 2% of that sales price, $400K, multiply them, and it comes out to $8,000. They're also going to take 9% of that gain, $100,000, and come up with $9,000, all right? The greater of those two becomes your withholding tax. In this case, 9 is greater than 8, so $9,000. A good question becomes, how do I avoid that withholding, okay? And the good news is that you can avoid the withholding entirely through one of 6 exemptions, right? Number 1, you're still an NJ resident at the time of closing. Number 2, the property is your principal residence and you qualify for the federal exclusion on capital gains tax, which is $250,000 as single, $500K as married. Third, the total sales price is $1,000 or less. 4, the property is being transferred under court order, which happens a lot of times with divorce. 5th, you're a government entity, a trust, or a tax-exempt organization. And 6th, you're 62 years of age or older, blind or disabled, and your income is below the NJ gross income threshold. Now, that 6th one, the last one, applies to a large subset of seniors. They're retiring and moving to a different state, and they're on a fixed income, all right? So if this sounds like your situation, please be sure to discuss it in detail with your attorney while you're preparing your home for sale. All right, another good question that comes up. What if I've already moved out of New Jersey? Well, if you've already moved out or you've already filed a change of address to another state, you will be classified as a non-resident, okay? The withholding tax will apply unless you qualify for one of those 6 exemptions. So you will need to file an NJ tax return to reconcile the actual gain and possibly get a refund. The good news here is that most people qualify for some sort of refund because the 2% of sales price, that $8,000 number, often overshoots the real taxes owed. Okay? Now, just to wrap up the whole video, is this exit tax real? Not exactly, okay? But it can surprise you if you're not prepared. So in closing, know your residency status. Use those exemptions if you qualify, and file your NJ tax return to claim any refund owed. If you've liked this video, please give it a thumbs up, okay? If you have questions, drop them in the comments down below. Please like, subscribe, or share for more insider real estate tips that save you time and money. Thanks, guys. I hope to see you and talk to you soon.